What are the major drivers here? As we talked about the elimination of the deduction for state and local taxation, that supposedly would save like $1 trillion over 10 years. Is that pivotal to be able to afford the tax cuts he's otherwise going to propose?
I mean, look, that is a critical source of revenue. As you said, it's $1 trillion or so over the next decade. And if that goes away, then that really limits what you can do in terms of lowering individual taxes. Now, remember, that's on the individual side. That's not on the business side. And there is this notion that individual will kind of pay for individual and business will pay for business. So whatever you lose on the individual side, I mean, in terms of revenue, you also lose that in terms of rate reduction. But it shouldn't affect what happens on the business side of the equation.
So go over to the business side for a minute, because one of the things we're told is it might well cut the tax rate from 35% down to 20%. How much is that likely to cost, and how could they pay for that?
Well, look, a good rule of thumb, it's not exact science, but a good rule of thumb is it's just a little bit over $100 billion of foregone revenue for every 1 point reduction in the corporate tax rate. So if you're talking about a 15-point reduction in the corporate tax rate, you're talking about $1.5, $1.7 trillion of foregone revenue over the next 10 years, and 10 years is the budget window that Congress traditionally uses. We've lost the border adjusted tax. That would have raised roughly $1 trillion, but that's no longer on the table. So you got to go back and look at the various proposals that have been on the table over the several years. Chairman Dave Camp, when he was chairman of the House Ways and Means Committee, had a bill in 2014. He had a host of revenue raisers. I think almost all of that stuff is on the table. And increasingly, it looks like they're going to add a little bit of it, pay for it, if you will, by adding some of it to the deficit. In the Senate, they're talking about a $1.5 trillion tax cut. And that $1.5 trillion is $1.5 trillion less of base broadening or revenue raising you have to do on the other side of the ledger, or alternatively, $1.5 trillion more tax relief that you can provide.